Rick, so patent-driven M&A was a big story in 2011, the Nortel patent auction, and then Google's purchase of Motorola Mobility. Can you talk to us a little bit about how deals such as those differ from a more traditional M&A activity?
Well, David, I think they differ in several respects. I think the most important way in which patent-driven M&A deals differ from conventional garden variety M&A deals lies in the fact that traditional valuation metrics, the customary valuation metrics that investment bankers and others use to place values on target companies in typical deals, simply are inapplicable in patent-driven deals. The fact of the matter is that the patents that are at the core of these transactions derive their value from the ability of the buyer to utilize them offensively and defensively in the patent litigation context. And the same patents may have considerable value to some buyers and virtually no value to certain other buyers, depending on those buyers' existing portfolios and the litigation risks associated with those buyers. So one of the things that you saw, for example, in the Nortel auction was an initial stalking horse bid by Google that was less than $1 billion. Ultimately, the transaction price was a whopping $4.5 billion, and I don't think any of the analysts expected a price anywhere near that high. And of course, if you look at the blockbuster Google Motorola Mobility deal, the price was $12.5 billion for that company. I think it's a price that took many observers by surprise because it's hard to get to that price using conventional valuation metrics.
Do you think we'll see continued activity in that area this year, given the recent bankruptcy of Eastman Kodak and pressure on RIM, the maker of BlackBerry, to explore potential transactions?
So it's hard to say whether those companies in particular are going to do something separate or as part of the sale of the entire company that focuses on the value of their patent portfolios. But there's no question that the pattern that seems to have developed with respect to which companies monetize their patent portfolios tends to be companies that are sort of at the end of their lives or in situations where the patent portfolio is one of the last remaining assets to be monetized. And some would say that both of those companies may fit that mold.